All right. Hello, everybody. Good afternoon and happy Thursday. We have a short week in trading this week, but it has been full of volatility to say the least. My name is Brandon Steele, financial advisor with Mainsail Financial Group just here in Bellevue. And our goal every Thursday is to bring to you the market news, data, trends that we're watching, and hopefully weed out a bit of the noise along the way. Hope everybody's having a good week here so far. We actually had a little bit of a technology issue today at the office. We had the power out in Bellevue for a little bit. So back up and running and just in time to make sure we still get you the Thursday weekly update here. So again, this week has been not super full of data, but it's been a very volatile week regardless. And in what is, a 4-day trading week as well. So we've had a great start through 2023 so far in the markets. It's funny, because in our industry, things are measured year to date and it can paint a rosy picture. But as you know, there's been some challenges back to 2022. Regardless, point to point, 2023 has been a strong start in the stock market. But this week, on a shorter week, we started to see some cracks in all this optimism we've been seeing lately. So Wednesday, retail sales numbers came out and we were down 1.1%. Producer price indexes, PPI, actually dropped 0.5%. So this was really interesting. We saw interest rates actually drop quite a bit on this news under the assumption that the Fed may slow down a little bit, basically. It seems to be the theme, right? And regardless, though, because of the retail sales numbers, we saw the stock market pull back quite a bit as well. So that kind of carried into Thursday today as well. Clawed back a little bit through the day, but today we had initial jobless claims come out showing 190,000, which is basically, I think it's like a 4-month low. But here we are again, where that's a good thing, by the way. Jobless claims as a low number is typically a good thing for the economy and therefore the market. But here we are again, where we have this good news, bad news type. It is bad news type of scenario. And even though the jobs market in this case is showing strong numbers, we saw the markets drop, especially at the early stages in the morning, kind of based on some of this news, assuming that this may mean that the Fed actually keeps going. So, I mean, it's amazing to see how everything is just based around the Fed right now. It seems to be the primary focus, and I am hopeful that as we move into February and get the Fed meeting, and more importantly, start to get into earnings season, maybe we get back to a place where, we're not hanging on every data point and always looking towards what the Fed is doing. That's probably a little bit optimistic on my end because we will still be in a similar situation. But hopefully some of the earnings story starts to tell a little bit as well, and we can kind of grasp onto something that maybe a little bit more long-term. And for long-term investors, remember too, the Fed has been clear about their path. I would be cautious in trading on this very volatile, very speculative, news cycle between each Fed meeting, because it seems to have happened for the last 9 months or so, and this could be a similar situation here. So, anyways, been a volatile week, but it is important to kind of mention this. Now, what I want to share about this initial jobless claims number today, again, 4-month low, but remember that the measure of this basically measures Americans who applied for unemployment. So remember that, that can be maybe taken with a bit of a grain of salt. We all know the challenges with the unemployment data that we receive. And although this is a good weekly data point, something to latch onto, it does have its challenges, but it does give us a little more frequency of kind of where the jobs market is going between the monthly non-farm payrolls that we get. So we pay really close attention to this jobless claims, but do know that there are some challenges with those figures as well. I think it'll be really interesting to see what the Fed shares and when it comes in February. But we'll see if we stick to the plan. I think that it is likely that they may change their tone, but likely that the meeting may kind of be similar. The decision may be similar to what they've been sharing, because for those who follow us, pretty regularly, we've seen a shift from goods to services lately, and along those lines has been a shift in inflation from goods to services. So the inflation rate on a lot of services out there is actually still running really, really high. And so I believe that the Fed is going to probably want to get that in check before they share that they're, willing to just kind of completely back off here. So we'll see. We still got a few weeks and a lot more data to come out in the meantime. But just be ready, gear up for that February meeting. That will be a very important one to kind of keep pay attention to. Coming up next week, we have GDP, we've got jobs, and we've got some housing data. So we'll break all that down next Thursday at 3. For the question of the week, we actually didn't get one this week. So what I wanted to share is hopefully what I thought would be helpful is just kind of a reminder on 2023 contribution limits. So as we move into the new year, if you haven't already, it would be a good time to readjust any of your 401k, IRA, HSA savings if you're able to take full advantage of the maximums. So for 2023, current year, 2023, 401ks are now at $22,500. So if you're under 50 years old, you can contribute up to a maximum of $22,500 to your 401k, and a total for those 50 and older of $30,000. All right. IRAs are obviously much lower thresholds or limits. And remember, there are income limits to some degree on a lot of these considerations on the IRA side of it. But the total IRA contribution limit is $6,500 for 2023. And again, you get a little bump if you're over 50. So for those 50 and older, a total of $7,500 for 2023. All right. Lastly, our HSAs, health savings accounts. So if you have a high deductible plan and you're taking advantage of a health savings account alongside of that, there are new limits as well for 2023. And those numbers are $7,750 per year for families and $3,850 per year for individuals. All right. And that's kind of based on the plan that you've opted into. So I hope that's a helpful kind of tidbit here for the start of 2023. Again, those are pretty big jumps compared to what we're used to seeing. So if you haven't already, hopefully it's a good reminder to take advantage of those new maximums and try and set up your contributions correctly for tax year 2023. All right, have a great upcoming weekend. Definitely let me know if you have a question on your mind. I'd be happy to answer it in our next weekly update. In the meantime, have a great upcoming weekend, and we will see you next Thursday at 3.